right, what is up, everybody? Welcome to another real estate wholesaling live analysis meetup. I believe this is episode 37, because the last one I'm looking, it's 36 that got recorded into the YouTube channel. So this is episode 37. If you're new here, welcome. We do these series. It's a new schedule now. Before it used to be Monday, Wednesday, and Friday, but the new schedule is every Sunday and Tuesday at 10 a.m. Pacific Standard Time. So if you're new here and you're interested in real estate wholesaling, or you're trying to get into real estate wholesaling, or if you're a real estate investor, or you're any type of real estate market whatsoever, whatever field you're in terms of like real estate, we do some live analysis over here for some bringing some offers in, how to look into some offers, understanding like some markets. My name is Elton, like Elton John. I just don't do any singing, but with I'm gonna be your main host, and will forever be your main host into these series, where we analyze some properties, look at to see how what makes a deal work and what doesn't make like a deal work. Answer a few questions, and at the end we do happen to be networking as well too, where there's gonna be a breakout room gonna be set up. So we are gonna be first things first, we're gonna be walking through a quick presentation. It's gonna be about 10-15 minutes roughly. After the presentation is when we start getting into some live analysis. I do like a random market, so I'm not analyzing the specific market whatsoever. And then from there, if there's any questions that pop up, you can drop the questions on the chat. We do have some Q&A after the presentation where you're able to unmute yourselves if you have anything specific afterwards. So we do have that Q&A after the presentation and the live analysis. And then again, after the Q&A, then we break out so that we guys can network with one another. If there's some investors in this, new wholesalers, so if you have like a property or a offer that you have in terms of like an off-market property, then by all means, that's the time to network with one another and showcase what it is that you do in terms of real estate. So with that being said, I'm just going to jump right into it, because again, this is a continuous series where it's just everything gets repetitive. And the reason why it gets repetitive is because it's all about repetition. The more repetition you get into this, it's going to be simpler for you to start getting some offers out there, understanding like your analysis, and eventually, if you're trying to become your own investor as well too, have like your own portfolio, then it's literally all about repetition, just like any other business whatsoever. So with that being said, we just got to jump right into it. First things first, that we got to understand about real estate wholesaling. There are a multitude of steps into real estate wholesaling. The main one for this series is mainly going through how do the offers get brought into play, and additionally understanding like repairs, what kind of properties you're looking into, if you have to be looking on market or off market properties. And again, if you happen to have like a property or an address, by all means drop it in the chat. If there's none, it's perfectly fine. I'll just use a random city selector and it will go through that market whatsoever, and then show you guys how to analyze those markets as well too, if you happen to if you don't know how to analyze like a specific market. So I'm going to be walking through those steps as well too. Part of the process of analyzing any deals, it's all about understanding how to calculate a lot of these offers. The first things first, a lot of investors want to know in terms of like fixing and flipping, or even just buying and holding as well too. And then of course there's other type of strategies that other investors do. It's you have to understand how your investors buy, and the very first thing they want to know about a specific market is what's the potential property it can sell for after it gets like fully fixed up, in terms of that market, if they're interested in fixing and flipping. If they're interested in buying and holding, it's just going to be a lot of analytical numbers in terms of like NOI, expenses, or what the rental income is in terms of like regular income in Section 8, but we can touch basis more on that. But the first foundation on terms of like understanding a lot of the numbers and analysis is ARV, or after repair value. And what that is basically what the property's worth after it gets fully fixed up. Over here, I'm in the Long Beach market. I don't do wholesaling in the Long Beach market. I do out of state wholesaling, so virtual wholesaling. But I do know my market over here as well too. So I do about 10 to 12 markets that I completely analyze, I understand, and try to pull deals out of those markets as well too. But the very first thing you want to understand is what the property's worth once it gets fixed up. Anything below the ARV, it's really down to like, understanding how your buyers buy. Not all buyers are going to be buying the same. Not all buyers are going to have the same strategies. Not all buyers are going to have the same materials they're going to be using for the repairs. Not all buyers are going to use the same type of financial at the end of the day. So all buyers are going to be very differently across the nation and just across all markets whatsoever. So it's really essential for you to understand how your buyers buy, because let's look at example one with investor one. Investor one, they subtract the repairs, they multiply whatever investment rule they have, and then they have to subtract like your wholesale fee out of the deal as well too. Investor two, there's a flip on some things, and investor three just does things a whole very different from all the other ones. So again, it's essentially for you to understand. First thing is your market, how your buyers buy, and then start looking for potential deals in that market area to make it easier for you to bring deals or look for those specific deals instead of just randomly looking for and hoping for a specific deal to just land in your lap, and then hoping for a buyer to like just accept like your deal, if regardless if it's on market or off market. Again, it really depends on just on how they buy it. So understand your buyers at all costs. Next, talk about costs. It is repairs. When looking into like repairs or potential repairs, if you want to bring that extra information to your buyer, or if you happen to have like a lot of off-market properties, it's really just keeping it as simple as possible in repairs. Because when I come across repairs, I'm just listing things that it needs, especially major areas, kitchen, bathroom, floors, painting, landscaping, roof, utilities, and foundation. Those are like the main ones that I look into like a deal. So I don't really spend a lot of time, because at the end of the day as well too, buyers will decide on how much they ever want to spend and the materials they want to use to use on their projects as well too. But looking into the repairs, I'm gonna be sticking to like these average repairs that are nationwide. Some markets are it's going to be a little bit more like California markets. Is for example, if I'm looking at light repairs on a project, it's usually between $10 to $20 per square foot average nationwide. But over here in California, it's a little bit more expensive, including some other states and areas and cities as well too. And usually with those states and cities, what I'm going to be adding is roughly adding $15 to $20 more per square foot on those areas, just because the labor is a little bit more expensive and slightly more on the materials as well too. But it's just mainly like on the labor side that it gets like really expensive, just because that's how that market is, specifically in terms of like getting projects repaired. And that applies not only to light repairs, but also average repairs and then gut job repairs. But looking into those light repairs, these type of properties that I'm looking into, these are going to be very updated or very freshed up and really well maintained throughout the years. So they're just gonna need very small touches, and then sometimes these could be rentals as well too. So they're just gonna need the bare minimum into it. Occasionally, you probably have like something else that you're gonna be spending, but you're not really spending a whole lot more than $20,000-$30,000. Again, depending on the size of the property as well too. Average repairs, this is where we start getting into those project type of properties where you have to update the kitchen, do the painting, do doors, windows. You have to do the landscaping, do the outside or the siding as well too, depending if you have has like a vinyl siding, bathroom, maybe the roof as well too. Check that if there's any leaks or just any major issues on it, and just any other touches as well too. Again, this is where a lot of fix and flippers come into play to look into those project type of properties. Now, the gut job repairs, this is the nightmare ones, because you pretty much have to do everything all over again on that property, or sometimes it has to get demolished as well too. So it really depends on the property's condition in terms of like gut job, where again, it can go either way of everything getting replaced. The only thing that if you happen to do a demo on it, you're not going to be taking away the foundation of it. You just have to double check that there's no major issues with it whatsoever. And usually with gut job repairs, there's always like a major flood, or there's like a huge fire or a small fire as well too. So it just really depends, but you're pretty much taking it down to like the studs and starting all over again. And then these can get from expensive to very expensive, depending on some other major issues that it's going on the property as well too. But those are the repair costs that we just went through. Next is when you're looking for properties or you're trying to find that ARV. I'm gonna show you guys one little hack to help you find the ARV on your market in a matter of like seconds. But when we're looking for that ARV, we also have to look. We have to look for similar properties that have sold in the area that have been getting fixed up. Either they got fixed up and sold, or they're got fixed up and they're in the contract at the moment. So those two are the type of comps you got to be looking for. But when you're looking at these comps, you want to stick within certain parameters to help you find that ideal property or find something that really matches your subject property whatsoever. First things first is going to be the living space or the square footage of the subject property. You're going to be looking at plus or minus 300. You don't want to go back. You want to go back to 6 to 9 months of these properties that have sold that have gotten fully fixed up. And additionally, too, when we're looking for comps, you want to stick within a specific radius of a half mile to 1 mile. This is not mandatory, but you are able to go a little bit more extensive, like 2 miles. The only thing with this, once you start expanding more out of that radius, now you have to play a term of like price. So you have to make some like price adjustments as well too. And not only that, but also the major issue with expanding on your radius is definitely the major roads. So you are going to come across major roads where there's bus lines. There's going to be train stations as well too. There's going to be delivery trucks passing on these roads, semi trucks, construction trucks, commuters, people getting to and from work. So usually with these major roads, it's basically splitting up the neighborhoods. And usually when you want to look for comps, you want to stick within the same neighborhood. So an example over here is the left side of this neighbor is going to be one neighborhood, and the right side of this road is going to be a whole different neighborhood as well too. No matter if there's a comp that it's so identical down to like the year, the square footage, everything, it's identical to your subject property. You can't pull that comp because that's a whole different neighborhood. And appraisers, when the property gets fixed up and it gets appraised, and the appraiser is looking for similar properties in the area to get an estimate of how much the property it will be worth. Once it gets fixed up, then again, they are going to be looking within the same neighborhood. They're not going to be extending themselves out of that neighborhood or whatsoever, just because there's another comp across the street of a major road. And then we're looking for these comps as well too. You want to look for at least 3 to 5 comps. You can get a mix of fully updated ones and also understand what's happening in the market right now and look for properties that are currently under contract as well too, or what's out there for sale at the moment. Because what has sold in the past is telling you what the market did in the past. What's under contract at the moment is telling what the market is doing right now. So what kind of changes are happening at the current moment, at the current markets. And then the properties that haven't sold and they're still for sale, those are future markets, letting you know like, hey, this fix and flip property has been sitting here for like 45 days. Maybe the property is overpriced or just something is going on, or maybe the rates are just way too high as well too. So there's a lot of factors to consider into it, but just it's always good to look at those 3 timeframes, so you can understand what's happening, what happened, what's happening, and what will happen in that specific market that you're looking into. So we're going to be walking down to understand what makes a deal for an investor. So more on the investor side as well too. So we'll walk through that in a few seconds, and I'm going to be using some free resources to analyze some of these properties like I'm using Redfin to look for some on-market properties if nobody has like a property for us to analyze whatsoever. So I'm just gonna pick a random city. I'm gonna use Zillow as well too, PropWire, and I also created like some of my own tools to help me understand and help me expedite my process on analyzing a lot of these deals. You can access those tools at eltonvargas.com/calculators if you want to check it out yourself. But other than that, let's just jump into the investor breakdown really quick. All right, so this is going to be an investor breakdown. And I'm looking at my left screen over here, so don't mind me if I'm not looking at you guys. If you happen to have like any questions, by all means, you can drop the questions in the chat, or you can wait afterwards, after the presentation, live analysis for some Q&A, or maybe even after the breakout room. just FYI. But this could be an investor strategy. This is a very common strategy. Again, all buyers are going to do it very differently. So you have to really understand how your buyers buy. So the first things first is understanding that like the strategy. This could be like the 70% strategy. I know this one is going to be very different from what some of you calculate like some of your deals, but we're just going to be walking down and see what makes like a deal for some buyers. But first things first, what we have to do on any single deal is have a property or have a seller interested on selling a property. So as an example, this seller wants to sell their property for $764,000. That's what they want. That's what they want to get. And we just have to make them understand. We have to understand their situation, what's going on, why do they want to sell, how quickly do they need to sell, and also do they understand that we're not agents, there's not going to be any commissions, there's not going to be any closing costs as well too, so make it as easy for them. So our offer is what they're going to be walking away, or what the title company is going to be depositing into their account once everything closes. But first we have to understand the seller's situation regardless, because that's the number one motivation over the money side. And then sometimes they can be just like the money, they're in need of the money, but you have to understand like how much do they need the money for as well too. But first things first, we got to look for a property. So but you come across a seller, they're interested in selling, they want $764,000. You're talking to them, you're trying to make them your friend, trying to understand the situation, and also understand what the property needs as well too. Simplest way if you're working with off-market sellers is uh, asking them as well too, something like, hey, Mr. Seller, if you have like 60, 50, $60,000 like or right now like available, what kind of updates would you do to like the property by any chance? And just start asking, like, you can give them options like, do you think the property needs some updates like in the kitchen, flooring, walls, like what do you think it needs, piping, or just whatever, because they lived in the property for so long, they know what are the major issues or what major updates the property might need. And that's the simplest way to asking so that way you can understand what the actual property needs. But it's always best to look the property in person additionally too. And then so far we estimate that the property, if you have to we checked it out in person, this property needs roughly around $80,000 worth of repairs. No specific square footage or anything. I'm just going through like the numbers specifically for right now. And then this happens to be any market, and you already know like your market whatsoever. So you want to know what the potential ARV is for that specific market. And a lot of the properties on this area for this subject property are going around roughly $875,000. So we know that there's a seller. We want to understand that there's the motivation. We want to understand what the property needs in repairs roughly. We don't have to go down to like the numbers specifically, but we got to understand where the numbers stand. And then we know our market already, so it makes it easy for us to find out what the ARV will be for that area. And then sometimes it's just little, if you already done some deals, it's pretty simple for you to come up with that ARV if you happen to be doing multiple deals in that area. But if it's gonna be like your first deal, it's always good to like back it up with some information, or AKA comps. So going through this process, this is how the 70% strategy will work. Again, not all buyers do like this, so it's completely fine if the numbers don't line up how your buyers do it. But again, all buyers buy very differently. So the way it goes is we subtract the 875, which is the ARV. We subtract the repairs from that ARV, which is going to give us a new number. And that number is $795,000. Out of that 795, that's when we multiply the 70% strategy into it, which the 70% concludes of two things. First thing is going to be the profit, the potential profit for the investor, which is going to be $159,000, and put also closing costs, because again, we told a seller, hey, Mr. Seller, we're willing to pay your closing costs as well too. To make it as easier for you to transition from this property to the next property, or whatever it is that you're trying to do to get out of this property. To make it as easy for you, we're willing to pay your closing costs. So this after multiplying that 70%, it's going to give you your investor's maximum allowable offer, which in this case is $556,500. Again, just having a conversation with the seller, it's really essential so that way you can understand and touch a lot of their points, a lot of their pain points, to help them make that move, but also you have to make them understand additionally too that you might not be the right buyer at the end of the day, but you're just here to help them out and then see if you are able to help them out in this case basis. So in this case basis, you work with the seller directly, and then you miraculously happen to be working with the homeowner directly, that you got the property under contract for $550,000. So you're like, cool, how often does this happen? Yeah, it definitely happens, and it's definitely just again working a lot of the conversation and building those base points, and also letting the seller know where your offer is coming from, addition to what's happening with like the market as well too. And again, that the offer, the $550,000 is basically what they're walking away with, if they don't have any mortgages as well too, or if they don't have like any liens. This is basically what the title slash escrow is going to be sending over to them. The only thing they have to take care on their side is the taxes. That's pretty much about it. But you got the property in the contract for $550,000. Now you want to apply your wholesaling fee into this when now that you're trying to get buyers to be interested in buying. And what that's called is doing an assignment of contract sale. And what that assignment of contract sale is, simply you're selling now the assignment of this specific subject property that you have under contract, which you're selling it for $570,000, which equals to a $20,000 wholesale fee, or whatever it is that you're trying to get out of your wholesale deal out of it. But for example, for this one, this could be a $20,000 wholesale fee. So that's how much we're going to be sending it over to. Additionally, if you remember, we are going to be paying the seller's closing costs. So that's going to be an additional expense for the investor. So now the investor is going to be looking at this section right over here. They're looking at the and also the repairs. So the investor's going to be looking at this. The investor's going to be looking at your wholesale fee, the closing costs, and also the repairs. So when you combine all those three, for on the investor side, they're not just buying $570,000. They're doing a little bit more. They're actually, when you combine all those three, their total investment in the beginning for this specific deal is $705,000. Why? And this could be a plus or minus game, because maybe the repairs might be more, might be less as well too. But the assignment fee, that's already fixed, because that's how much you are doing the assignment for. The closing cost, that's already fixed, because it goes based on the properties, what the property is selling for actually, not the assignment. And so all those combined, again, the only thing that makes it plus or minus is those repairs, because again, it really depends if the investor wants to use minimal repairs or very expensive repairs. But that's their initial investment on this deal. Now, if we analyze the deal backwards from the ARV, now let's look it down and see if it makes like a deal worth their time. So first things first, we're going to be looking at their ARV, or the resale value, which we mentioned to them, hey, the ARV for this market or for this area, it's $875,000. The investor is going to be paying for the agent fees to list the property and get it out there as well too, for first-time home buyers or anybody who wants to move into this fix and flip property. They're going to be paying closing costs again. And now their profit after those expenses is 796,250. But we have to subtract what they initially invested into this deal. So that $705,000 that I was mentioning earlier, we subtract those two, and the actual profit for the investor happens to be $91,250. If you remember earlier, based on the 70% strategy, the potential profit was going to be 159, which is roughly 20%. But at the end of the day, it actually turned out to be 91,000, or 11.48%. And again, this could be a plus or minus because of two reasons. One, the repairs could be plus or minus, and also the potential how much the property can sell for. This could be a plus or minus as well too, because the property can sell over the asking price if it's going to be like a hot market area. Because again, a lot of investors go based off location, and also depending on the work that the agent does as well too. And so it's really a plus or minus game in terms of like real estate. And again, this actual profit, it's also a plus or minus additionally too, but that makes it a deal. And I know for sure from my experience with buyers, 91,000 for some investors is more than perfectly fine. They'll definitely take that as well too. Of course, you can have some other expenses as well too, but like I mentioned, it's a plus or minus game. But this gives you like a full breakdown of what makes like a deal work for them. So it's essentially great to understand how your buyers buy. So hopefully that's able to give you a perspective on analyzing some deals and then give you like a perspective of how an investor will think on this case. But now let's get into some analyzing because that's what you guys came here for. So let's analyze some properties. And let me share the main page over here and let me pull up the spin the wheel. So again, if you want to have access to the calculators, some of these calculators I'm going to be using are on the chat as well too. The link is on the chat. But let me pull in a random city and let me pull the ARV calculator. Here we go. And whatever city lands, I'm gonna go through this CRM that I designed to help it understand. We just did Florida last time, so let me do a whole different state because I don't want to do the same state all over again. Let's see. Kansas City, Kansas. All right, so we're in the Kansas City, Kansas side. Kansas City, Missouri, Kansas. And let's do Kansas City, Kansas. Again, if you happen to have an address, by all means, you can drop in chat. If you don't, it's perfectly fine. We'll find a deal over here. So first things first, since I'm not in the market of Kansas City whatsoever, I want to understand what the market does. So this is how I find the potential ARV of Kansas City, of Kansas City's market. Kansas City, Kansas. So if I'm looking at Kansas City in the Kansas side, because it looks like it splits up into Missouri. If I'm looking to the Kansas City, Kansas side on Zillow, Zillow does my homework for me. And what I'm going to be doing is this, I like to go based on counties as well too. So counties give you like a better spectrum. So let me see, City, Kansas City, Kansas County. Wyandotte. Let's see. So it looks like we have Wyandotte. Oh, oh, this is how it is. So it looks like we have let's more circle. So Wyandotte and Johnson. Okay, so I'm gonna do Wyandotte. Let me delete this. And also you can do this thing as well too in Wyandotte County. Okay, cool. Let me start all over again over here and refresh this, reset all the filters, and let me go to Wyandotte County. And in just a few seconds, I'm gonna show you how to analyze your market in any market in a matter of seconds. So this is the way it goes. So you can do it on Zillow. I'm gonna show you how to do it on Refer in a second. So you scroll down, 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 past all the properties, past that whole set of numbers of properties that you're looking into. And right here, nearby Wyandotte County city homes. So over here it tells you all the cities near our county and how much a lot of these homes are selling for in the specific city. You can go down even further. You can go down specifically to strictly like zip codes if you happen to be liking specific zip codes or your buyers like specific zip codes. But what I'm gonna be doing with this is I'm gonna highlight all this. I'm gonna copy it. I'm gonna bring this to the CRM because the very first thing is to analyze my markets, and I don't know the Kansas City, Wyandotte County markets. And and what I'm gonna be doing over here is I'm gonna be doing a paste special. So I'm gonna do paste special values, and then paste. And bam, right here is the potential ARV on the left side. And then right here is my potential offers or what I should be looking for on this deal, on these properties. If I'm looking for a lot of fixing and flipping strategies. Yeah, there's a other one, which is buying and holding. So the numbers on the right side will change. But I'm looking for a lot of fix and flip deals. So what this does, it tells me like this is the highest type of price that you should be looking for properties if you're looking to fix and flip in Kansas City, in Merriam Homes, in Parkville, in Booner, in Edwardsville, and all of it combined. Or you can go down to all of them, combining all of them together as well too. And then you can look for the average of these numbers over here as well too. So I'm gonna look at it both. So that's the way you get it from Zillow. If you go through Redfin just started doing this, as a matter of fact, and it's right over here. Um, Show more, and it shows you the cities as well too, and how much the cities are, how much a lot of these homes in these cities are going for. And then for our market, over here, it tells you of it doesn't give you Kansas City for whatever reason. But it gives you like the counties as well too. But some of the, it does tell you. And if you guys can see, Kansas City is $210,000 on Redfin, and then on Zillow it says 178. So that's your range of the ARV, as well too. But same thing, what I can do is just copy all of this, all of these cities, all of these cities, and go through over here on my CRM, and I can put over here Zillow, Wyandotte County, and then I can do over here Redfin, Wyandotte County, and then do the same thing, do the paste special values only, and then paste, and then bam, there it is. And then Kansas City is over here. So like I said, it gives you like a range. So now you understand where a lot of these numbers are standing. It's missing some of the cities, and that's perfectly fine. But this is averaging it out based on the ones that actually have like that, the bigger numbers. But again, Redfin is just starting to do it. So the one I rely with the most is honestly Zillow, because Zillow likes to be a little bit more aggressive. So now what I'm going to be doing is looking at Zillow, Kansas City, 124,000 is my property that I should be looking for the most. So let me start filtering down, and let me add my filters into it so that way I can start looking for some deals. So I'm looking for single family homes. I'm looking for I'm not looking for anything coming soon. I'm looking for what's available right now. I like 1,000 square feet and higher type of properties. And now let me set up the price. I think it's at $124,000. And let's see what I'm able to find for $124,000. So I skip all the other type of projects out there as well too. Again, based on Redfin, I can go a little bit higher. Redfin tells me that I can go. Oh, why is there two? I think this might be the Missouri side for whatever reason, maybe. But the other ones tell me I can go all the way up to like $147,000. So this is where I can start playing like a name of numbers. So let's call this an even $130,000. So now I have a total of 13 available opportunities over here that are selling, that are under $105,000. And all I have to do with each single property, all these 13 results, is just to confirm, can the property sell for $178,000 or more? And that's what I have to look for. Those are my comps. I got to look for comps that are selling for $178,148 or more. And that's what I have to do with each single of these. But I want to make sure, are they fix and flip properties, or are they already fully updated? Or what kind of work are we going to need on this type of property whatsoever? So looking at the first one, floors look good. Looks like the walls need some type of work. I'm not sure if it was like a flood or something, because that looks a little bit moldy and like kind of like breaking apart. So I think there might have been like a flood or something. So some walls, windows as well too. You have a little bit older windows. It looks like this is pretty much just like 20% done. So it looks like we have to do some electrical. There's some doors as in there as well too. Kitchen, bathrooms, some flooring as well too. So pretty much this is like an average size type of project that we're looking into. So this one's not too bad. How long has it been listed for? It's been on Zillow for 18 hours. Oh, so still fresh. So that one, I like it. It's a project. Um, but let's look for a one that hasn't been sitting here for a while. That's been sitting for 14 days. This one has been sitting for like 1 day, but it's already okay. So these are good projects. These are not like two major projects. Not too bad. This is already fully fixed up. Hey, 1,500? That's not bad. You can buy yourself a home in Kansas City, probably rent it out for, and then if I'm looking at the home right next to it. It got fully updated as well too. So it looks like this street is already getting some projects already done. And honestly, if you do like 10% down, what is that? $12,000 plus closing costs. What is it? 120,000. What is that going to be? 10% closing costs, like 3%, so 13%. Oh man, all you need is like $15,000 and then you can make this like a good rental because this is already like really in really great shape whatsoever too. Maybe like the outside, do a little bit painting, but what attracts me about this is the home right next to it. If you look at the homes right next to it in the area or in that street are already getting like fixed up or something, then that's gonna be a really good area to look into. But that's a home that is really pretty much already over and done with for $120,000, which it's still negotiable, so you can get it less than that, which is pretty cool. But let's look over here. So I'm gonna start with this one because this one's like the one that needs like the most out of the project. So let me go back to the calculator. Let me pull it up over here. What's going on over here? Let's refresh this. All right. All right, cool. So I'm trying to wholesale this deal. Where's my property? My property is right over here. It's at a 1045. And the square footage, does it have a basement? Basement, it's a crawl space. All right, cool. No basement on this because I know some states have basements. Oh, asking price. And they're asking $105,000. So let's check it out. But it's still very new. But again, I want to understand what the situation is with the seller. The square footage is 1045. Yep, 1045. There's no basement, so zero in the basement. So off the bat, the calculator tells me if the property is listed at $105,000, I'm trying to wholesale, I need to get it under contract for 68,250. But again, I still have to do my homework because I need to confirm, can the property, going back to my market analysis, can the property sell for $178,000? That's something major that I need to confirm. So I need to go through like the rest. I was mentioning to you that this property does need some average repairs type of work. I was listing some walls because there's some damage on some of those walls, windows, some floorings like in the major areas, kitchen, bathrooms, and it looks like electrical as well too. So that's getting into like the average type of project on this one. So average is between 25 to like $40 per square foot. I'm gonna play it safe and say $30. $30 is my number, but if I want to really play it safe, I'm gonna add $5 more. So I'm gonna go with $35 on this one. So I'll say it needs roughly $36,575 more on repairs. If I were to fix and flip this, if you guys remember earlier from the investor example, the first profit happened to be 20%, but then afterwards it turned out to be 11%. So this is something that's going to happen with it. So if I'm looking for a 20% out of this deal, the property needs to sell for $182,000. And if you go back to our market analysis from earlier, you can see that that's really close to what the property needs to sell for or are selling for in Kansas City based out of Zillow. Because again, Zillow is there's a lot of more properties selling in that area. So now what I have to do is confirm, can it sell for that much? So I gotta look for some comps. So let me duplicate this really quick. Let me go back to where my subject property is. And my subject property is right over here. Looks like it's really close to like downtown. I think it's this one right here. Oh, there's a property selling for $1. Nice. Oh, it's an auction. All right, so let's look for this. So let's take away the maximum uh of that. Let me look for the property's 1045. So I gotta do plus or minus 300 on the square footage to look for comps. So it'll be 13 sorry. Yeah, 1345. Oh, so there's no 13 or 14. Um, I'll go with 1250. So let me go with oh, did it backwards. So 750 here, and then I'm gonna go with 1250 here. And I'm gonna be looking for right now what's selling in the area as well too. Is there anything else selling in the area for 180, $182,000 out of it? And then let me see if there's anything under contract right now. Hey. The only thing in this area selling for 180 is this one right over here. This is already fully fixed up. It's in way better condition. The outside, I don't really like it, but I'm not in the business of liking. Um, so let's see. Great walls, paint, lighting, somewhat good. Bathroom has a tile, a little bit older faucet. Um, this is weird. But I think this has a basement. But this is a 3-2 selling for 100. But this is kind of some updated cabinets. They could do a little bit better. But sometimes some of these properties are rentals as well too. But that's the only one that I see that it's selling for $170,000. And the thing is, I was mentioning to you guys earlier, part of this when you're looking for comps is staying away from these major roads. So these major roads that I'm looking into, it's this one, it says State Avenue. This is definitely going to be a major road. 18th Street is going to be a major road, and Central Avenue. So I basically have to look for properties within this quadrant right over here. Um, I can go outside of those, but once I start going outside of those streets, those major streets, then it's literally you have to reduce some of the price as well too. So nothing under contract that is selling for $180,000. So let me look and see if there's something that has sold. Oh man. And usually when you see this, these dashes in some states, it's a non-disclosure state. So this is going to be a challenging one, man. But okay, let me so non-disclosure states basically don't tell you how much the property sold for because that's how the state is applied into it. But let me look for what has sold in the area in the last 6 months. And what I'm gonna be doing is I'm gonna be drawing that boundary. So this boundary that I was mentioning to you is that state line, North 18th Street, Central, and it looks like there's like a major freeway or major road right there. So this is gonna be my area that I gotta look for comps. And let me see what I'm able to find over here. This one sold in March 22nd, so not too long ago. Um, it's not fully updated, but it's in a way better condition than our subject property. And here's the thing is I gotta look at the beds and baths as well too, and also the square footage. Because our subject property is a 3 bedroom, 1 bath. So if I'm looking for properties that are 4 bedroom, 2 bath, and they're a little bit bigger as well too, then that means we have to add an extra bedroom or an extra bathroom for our subject property. So when you're looking for comps, you want to look within the same parameter, but you also want to see what's actually selling. So I got to look through the rest as well too. So that's a 4-2. This is a 3-3, 1,200 square foot home. And then this is a 2-level home. It's our subject property 2 levels. It's more like 1.5. So it doesn't have like a full level as well too. Um, as you can see over here, it's like a full level because you can see one window over here, and there's another window right here on the left side as well. But over here, it's just like that, a small kind of like what do you call that? Like a small shed, not shed, roof type of room. So that one is just out of our picture. This one too is also a 2-level home. This one sold in November. It's a fully updated. It's in good condition, better condition. Walls are gray and white. It basically tells me that they've been fixed up in the past, basically. Cabinets, looks like a lot of the cabinets are very like brown, so it looks like that's how they are. But it's a little bit smaller than our subject property, but it's a 3 bedroom, 1 bath. So this is one of these comps that I have to pull because of how the property is already like again fully not fully updated like right now, but it's been updated in the past. It's just somebody has been living here and they were interested on selling their home or they're moving out, so that's why those pictures looks a little bit cluttery. But it's a 3 bedroom, 1 bath, and this property sold for how much? Let's look at the history. So it was $100,000. So I'm gonna estimate that it was $100,000 that it sold for. So $100,000 divided by 936 of the square footage. $100,000. Sometimes you have to do some of this stuff manually. So it's $106 per square foot. So our potential ARV is $180,000. So I'm gonna put that over here. Oops, an extra zero. But this our first comp is $106,000. And here's the thing, I gotta find three, and I'm already done with my with some of these properties that have sold in the past. This one's a great one, 3 bedroom, 2 bath. So we need to add an extra bathroom to our subject property, but this is 1134, great condition, faucet, bathroom. sorry, vanity, bathroom, doors, paint, kitchen, pretty much everything, floors, just pretty much everything got done to this one. And how much did this one sell roughly for? This was listed for rent, and it was selling for $135,000, and the square footage is a little bit bigger, 1134. So $119 per square foot. Ooh, 119. So I gotta look for another subject property. So let me look through for it on Redfin and see if I'm able to find something. Is this our subject property? Yeah, our subject property is right over here. Because sometimes Zillow is gonna give me some information, sometimes Redfin is gonna give me some information. So it really is gonna. It's always good to look at multiple sources, especially if you're not a real estate agent that has access to the MLS. But let's see what we're able to find over here. Uh, oh, okay, we have this $160,000 one. Oh, this is that 4.2. Is this that 4.2 property? The first one? So 1238. Also, this sold for 160. But 160, you see, that's why I want to look at different resources. So that sold for 160. That two-level one that I was mentioning, because it's two major levels, it's selling for that much. That's 100. This one 75. Okay. So it's showing us that we saw this one. There's this one that I didn't see on Zillow. Whoa, okay. Three, 2.5, not bad. 1180, great. So this is another one right here. Bam. This is a third comp. And this sold in March 13th this year for $119,000 divided by 1180. That puts it at $100 per square foot. So I don't have to change it. It's already right there. So it's telling me after doing my due diligence that my property can sell for $113,000, because what it does is getting all of these a price per square foot on all these comps, and that's the most that it can really sell for, and that's really bad. Man, 119. This one sold where's the other one sold for? Um, man, but that's really bad. That's not even really close to our offer, because if we were to put this as our what our property can sell for, we can push it because it's gonna take like maybe like a month, 2 months for it to fix up. What is that, May? So we could probably sell for like $120,000. So I'm pushing it a little bit as well too. So our offer needs to be, in all reality, it needs to be, if an investor is willing to pay, so this is the investor breakdown, right over here in the bottom section, and then this how much an investor is willing to pay for this property: $47,000 all the way up to $58,000. This is a range between a conservative and an aggressive investor, and that's because that's what the comps were telling me. It was a little bit challenging because it didn't tell me how much they sold for on Zillow, but then when you look through Redfin still gives you some information over here, and that's sticking within our range right over here. These are all of our properties. So six properties that we have over here. But that's what this specific market is telling me that it can sell for. So if I were to, especially with this property, it is on market with an agent. So honestly, I would just have to tell the agent, like, look, our offer is coming way below asking, and that's because I'm finding that out from what the area is telling me. So the property, it is still very fresh. It's still like it's been like a couple hours that it's been sitting here. Um, but it says excellent rental opportunity. So let's change it to a fix instead of a fix and flip, let's make it a rental property. If you get a rental, then you can see an investor that is willing to buy and hold this property to rent it out. They'll pay a little bit more because again, now you're probably going to be spending a little bit less on the materials for it. But even just buying and holding, still, your offer is going to be between 36 to like 43% off whatever it is that they're asking. So this agent's like really pushing it like as if it's already fully updated, and I'm not really liking that whatsoever. So this is a agent that really just wants to make their money out on this deal, and doesn't really probably didn't look at the comps, and that it's like, oh yeah, the property can sell for $100,000, because there's nothing selling well, there's nothing selling close to like $100,000 um that it doesn't even work. And if I look at the after like our states line or our borders of it, you can see some of these properties in the other side of our major roads that are selling between 60 to like $70,000. So, and then that's what our range is for a buy and hold. So it looks like this is going to be a buy and hold area. But again, our offer needs to be below this to make sense for an investor as well too. Again, sometimes there are some buyers that are willing to even pay more than this as well too, but it's just how the game goes as well too. It just really has to make sense. And then this is how much they're gonna be making under profit on this deal. So my offer on this again has to be below from what the investor's willing to pay for it. And then if you guys look at it earlier, where does my offer? Oh, I changed the strategy. Let's go back to the fix and flip. So this is the investors are on the fixing and flipping side, 47 to $58,000. And then my possible offer was 68,000. So that's way too much as well too. So that's why I have to do my due diligence to confirm can the property sell for this based on what the market is telling me. Can the property sell for $178,000 or $200,000 once it gets fully fixed up? Yes or no? But I have to confirm that information. But that market analysis really helps you out, identify those the market. But all you have to do whenever you're looking at a subject property is just confirm can the property sell for that much. And then based on this one, it cannot sell for that $182,000 price point for us to make our 20% profit on this deal. The most that it can sell for is 113. I'm pushing it to 120 because by the time it gets fixed up and it gets listed on the market, this could be probably end of it's gonna be like mid-May and beginning of like June as well too. So depending on how quickly we're trying to get into it. But based on this area, it looks like it's a buy and hold a type of area. So it's gonna be even quicker, maybe even so by mid-May as well too, to get it fully rented out. And then that's where you have to like analyze how much can the rental go for in that area as well too. But that's a full analysis breakdown from right there if to help you guys understand. I know it might not be like your market, but it's pretty much the same steps to all markets where you have to and that's why I set up some numbers over here is first things first, I gotta look for the markets. I gotta study my markets if I'm new to an area. If I'm new to that area, then put in all the numbers in, get it from Zillow, because Zillow is gonna give me that information. Afterwards, start looking for some buyers, start looking for some agents, start looking for some other wholesalers, title companies, construction, general contractors, as well too. So you want to start building your list of people in your area. And then start looking for some properties. Look for properties where there's sellers selling, for sale by owners, and then there's agent selling, and then just start putting your marketing into that area so that we can get some off-market properties as well too. And then when you're looking at properties, pull your comps, put in your comps, and then track what it is that you have under contract. And then from there, just it's a repeating process of if you happen to be looking into like a whole different other market as well too. But if not, then after step number 5 gets completed, that means you close like your deal is going back to step 3 and you're repeating step 3 and 5 over and over and over again. And then occasionally you're gonna go to step 2 because you have a new buyer, new criteria, new buy box, new this, new that. But step 3 through 5 is basically just repetition. And that's what this series is all about. It's about repeating on analysis because the market is constantly changing. You want to look into a market that it's like a market that is thriving. And one way you can find that as well too, to help you guys out, specific look for like any markets. It's this little hacker over here. Let me reset all this. And let's go through Zillow. What was it? Wyandotte county, Kansas. So going back to our county over here, if you want to look for like a hot market, is look for what has sold in the area in the last 3 months, 30 days, 90 days. And right here, you want to zoom into where's the most bubbles at. If I'm looking over here, basically in our area that we're looking into, this is our bubbles. This is where our most of our bubbles are located. And then you can draw, let me use this little drop button over here. let me draw this giant circle over here. So this is one area right over here. Let's see how many properties have sold there in the last 3 months. 104. Cool. Let me redraw a new one. Let's check out this whole rectangle over here. How many properties have sold here in the last 3 months? It's a little bit bigger, so I'm hoping, oh, 105. So the smaller area right over here in Kansas City, Kansas, um, it's more dense, but more 104 properties, so one less than this huge area over here. There's more activity. So that to me is a huge that's a great market area to look into. Let's check out like this whole craziness over here. Looks like it splits into like the river, some other state, into the some other state as well too, probably Missouri side. How many properties have sold in this area? 31. So out of these three areas right over here that I will look into, then I will pick this right over here where it says Northwest because 104 properties sold in a smaller, more denser area and then in this whole rectangle, more spread out type of area whatsoever. So that will be the way I will look into it. And the way I broke it down is looking into like the major roads. So that Highway 570. So I'm kind of like spreading or trying to close it out into like the freeways. So whatever market area you're looking into, just try to look for like where the freeways are located. If it's like way too spread out, then start cutting into like some neighborhoods as well too. You want to split it out where it makes sense as well too. Just look for those major roads as well too. I know Kansas City looks like it's a little bit more denser, more condensed, and it's really close to like downtown as well too. But again, that's the way I will look into it because that's where the most activity is happening in the last 3 months. So that's the way I will pick like any market whatsoever. But I'm gonna leave it open for some Q&A if you guys happen to have like any questions. This is that Q&A time. You guys should be able to unmute yourselves as well too. You can drop your questions in the chat or you're able to unmute yourselves if you happen to have like any questions whatsoever. Because I know I've been talking the whole time. No questions? Okay. Um, let's see how many people are here. Oh, just one person. Okay. Well, I was gonna do a breaker room, but there's not a lot of people on this, and that's perfectly fine. But um if you happen to have like any questions, you can always message me on meetup.com. But that's gonna be pretty much our wrap for today's live event of doing some analysis. So the recording, the videos and analysis get recorded, so it's going to be available on YouTube if you happen to miss on it for whatever reason. But thank you for attending our today's what is it, April 2nd live event. The next event will be on Sunday at 10 a.m. Pacific Standard Time. So if you want to come back again for another live analysis, or if you have a property that you get stuck and you want to get for need help on getting it analyzed, so that we can understand your area and your make sure that everything is it looks like it's a great opportunity for that property, then by all means bring it over and we'll analyze it together and see what we're able to get out of that as well.
Sorry, yeah, I may actually have one question. Thanks for
Oh,
the analysis.
yeah.
I'm very new. I'm very new. I'm just learning from the zero.
Okay.
So one of the thing you did is actually finding the market from like a wheel spinning, like lottery. But is there any way you actually try to find a good market for rental properties, like where the investor is a buy and hold?
Uh, well, when you're looking into buying and holding, it's literally down to like the numbers. So what I mean by that, in down to like the numbers, you have to understand the rental analysis. Rental analysis can go both into the regular rent or Section 8. I'm not sure if you know what Section 8 is.
No, sorry,
You don't know what Section 8 is?
no.
So Section 8 is basically uh, low income people that need help and they get help from like the government. So the
Ah,
government
okay.
helps them with like housing, and that's called Section 8. So it's
Okay,
the
the,
for
the investor actually like the what the condition is like the investable amount is up to 500,000 and looking for a property where like the investor is kind of little bit scared about all the squatter and all the things is happening. So wants to have a place where this kind of risks are low. So that means like maybe is like more high quality rental.
So, well, yeah, that's where the due diligence has to come into place, because you wanna look for neighborhoods, because there's gonna be B neighborhoods, A neighborhoods, B neighborhoods, C neighborhoods. The A neighborhoods is gonna be a little bit more expensive, and the rent might not be there as much as often. So you're not gonna have like really long term tenants. B and C neighborhoods, this is where you're gonna have like middle class and blue collar workers as well too. So you just want to look more into those areas, and can just determine what's around the area, what's happening in that area whatsoever. If you're looking for like low risk investments, then really going to come down to like the price. Like, I don't know what your market area might be as well too, but let's say for example in Kansas City, I will have to look for like those better working class areas, so that, and see what the rents are like there as well too, and understand how long do those tenants stay on those great market areas. Are they there for like only 6 months to a year, or are they more like the B and C class tenants, where are they there for like a very long time, where you talk about like decades, 10, 20, 30 years. So you have really long-term tenants on those areas. So that's something that you have to consider into it. But when you're analyzing for risk, it's risk is going to be measured in so many different ways. It could be a risk on the interest rates, because interest rates are still kind of high right now. This could be a risk on the price, but also understand the risk of the rent. You also want to understand the risk of the what your return will be. So now you have to understand more of the analysis side. So here, actually, let me show you what I'm talking about, because that's one of the examples I was gonna be doing is the rental side. But one of the calculators that I have is analyzing in terms of like renting, because if that's like your main strategy, is you have to understand all of these numbers right over here. Is you have to understand like the cap rates. Cap rate helps you identify risk, but it helps you identify risk in terms of how long, what kind of deal that you're getting into. Because that's a strategy on its own. You want to look at the cash flow, how much the property can cash flow in terms of it. The debt service, aka the mortgage, how much will your mortgage be based on the rates today as well too. How long are you to break even on that deal? And then also, again, how much are you buying like the property? But before, a little before that, you want to understand what kind of expenses are you going to have if you're investing in state or out of state. In state is going to be a little bit easier if you have to be, if you want to manage it like yourself, or inside of like your area. Or if you want to manage it, if you want to do out of state deals, you're gonna have a property manager. So now you have to contact that property manager, get in touch with property management, make sure that they how well do they do the work. You're gonna be paying like them like a fee between 8 to like 10% as well too. So you gotta be breaking down like your expenses into like the deal, where your taxes is, your insurance. If there's a HOA, if you happen to be looking for a property that it's an HOA as well too. Usually HOAs are gonna have I gotta have restrictions. So if you're trying to update it or need some type of work as well too, that's where those restrictions come into play. And using HOA, you're not gonna have a lot of Section 8 renters in that area. So it's just gonna be the bare minimum of what's happening, because Section 8, basically the government pays more. They usually pay like 10, 20, 30% more than the average rent. So the average rent here in Long Beach, California, it's like 1,500, 1,600 for a one bedroom, one bathroom. But Section 8 is willing to pay $1,900 or even more as well too, just for being a Section 8, having a Section 8 tenant. But again, you have to understand like there's not just one risk. You're gonna have multiple types of risks involved on a deal when you're looking into a property or an investment whatsoever. So it's just going to be a quite amount of handful, but you have to understand like the numbers, a lot of it as well too. So if the buy and hold is a strategy, it's strictly down to the numbers. How much you buy the property for, the area that that you're buying into, how much can the property rent for, or what kind of expenses you're gonna have. and what kind of income or what kind of cash flow are you going to have on this deal whatsoever. Is it even going to cash flow right now as well too? So those are pretty much the six major risks that you're going to be looking into it. And also depending on your strategy, are you buying and holding for the next 10 to 15 years to do a 1031 exchange? Or are you buying for very long term, like you talk about like decades and maybe have generational wealth where you're passing it over to like your kids and your kids to their kids and so on forth. So there's a multitude of things, especially if you happen to be like a beginner, you want to understand a lot of this language for when it comes to buying and holding a property.
Okay, understood. Yeah, thanks.
Yeah, I
Thank
know
you.
it's a handful, and for me, it comes out easily, but it just takes a lot of time, and those are the things that you really have to understand. On my website, eltonvargas.com, I have an educational side. On the educational side, there's a book that you can download for free there. Um, that it talks about how to have like your own rental property, analyze rental properties as well too, in terms of like market analysis and pretty much everything. And all those numbers that I was just talking about, from cap rate to net income to expenses and property managers as well too. So there's I think there's like about two or three books that talks about all the rental analysis that you need and helps you understand all those. So I read some of those books as well too. So to help you out, I'll recommend downloading or reading those books. It's a PDF, so you can download it into like a PDF and have access to that
From where? Sorry,
from
where?
my website,
From your website. Yeah, I'm looking at the website.
eltonvargas.com.
Yeah,
And let me pull it up.
I see calculators, resource.
Yeah, so it's gonna be in the calculator side. You can use that link, the one that I put in the chat, and then head over to the real estate education. So right over here, if you're
Okay.
like on the desktop, and then
Yeah.
go past like all the videos, and then there's gonna be a few books over here at the bottom
Ah,
section.
okay.
So
Got
you're
it.
able to download those. The one that I'm talking about is this one, is rental property investment. That's the one that you want to look into as well too. That's like the main one that I was just talking about just now.
Mm.
So that one's going to
Thanks.
help you understand a lot of the rental stuff. And then if you want to look at the other ones, you can download those as well too. So these are going to be your books right there.
Yes. Thank you very much.
Okay. Yeah, my pleasure. If you happen to have like any other questions, you can always reach out to me on Meetup. But yeah, as a beginner, it's definitely studying, but you also want to take action. And the reason why I say take action as quickly as possible is because rates are going to be changing, but you don't want to wait too long. Once rates change or once rates drop, prices are going to go up. I'm not sure if you noticed that on the calculator. That's how one of these strategies, the main one, a lot of investors look into when it comes into renting. It's all about cap rate. So usually the strategy with cap rate, it works like this. You always want to buy it at the lowest cap rate, because you always want to buy it at the highest cap rate, because the highest cap rate basically tells you the price drops. So
Mhm.
higher cap rate, lower price.
Okay.
Lower cap rate in some areas.
Yield versus price is inversely proportional. Okay.
Yeah, exactly. So that's the thing is and that's the main strategy when you're looking into cap rate. You always want to buy high, and then whenever you want to get rid of it for whatever reason, or AKA do a 1031 exchange, you want to sell it as low as possible. And that's because over time the price fluctuated, and then the market changed, and that neighborhood changed as well too. So it's just looking into those into that
Okay,
major
like
analysis.
the last question, I'm not sure.
Yes.
I know like maybe you don't want to answer, like just give me from your top of head two markets for rental buy and hold you think like good for starting analysis for myself. I'm
Well,
not holding you for this one. I'm just like saying, just give me, because it's a huge country, right? So just give me two top of your head.
Well, here's the thing is it's a mix of answers that it's a mix answer that I can give you because it really depends. Because I know the markets in Missouri, on some Missouri side, St. Louis. I know the markets in Indiana, a few cities, Indianapolis, Gary, and some other ones. I know the markets in Illinois, Alabama, and the reason also Arkansas and Georgia. I know these markets, and I like those markets because they're landlord friendly. And what landlord friendly is if there's any issues with the tenants, um, when it comes to issues with the tenants, it's how quickly can you get them out, or like how quickly can you evict them for whatever reason, rather than working with states that are rental friendly. California is rental friendly, and what that means is basically you have to go through a process to the state supports more on the renter side rather than the landlord or the owner of the property, and it takes a long time for you to kick out. Rather in some of those states, if you happen to have issues with tenants, then
Can,
if they
can
happen
I just take a note, the renter friendly?
5 days, 3 days, 5 days, if they're late for their payment on the rent is late by 1 day, you can kick them out in 3 days. So
Which states do you talk about? Sorry, I just wanted to take the note, like the
Uh, uh,
states, which is
so one
Missouri.
is gonna be Indiana, Arkansas, Alabama. Um, the other one's gonna be
Uh,
Ohio as well too. So
oh,
all the red states basically.
okay, hold on. And then it includes the Florida and Texas as well then.
Texas, yes, and Florida's a blue state.
Ah, really? Ron DeSantis, no?
Nope.
Hmm.
So that's the thing is you want to start it depends on what kind of state you want to look for. But here's the thing, that you want to work with red and blue states, is if you work with blue states, are some of the blue states as well too pick up in value. So now you have to get an understanding of like the areas that you're getting into, because those red states, they're not going to pick as much value as some of the blue states. Like example, here in California, the properties are $700,000 or $700,000 or more. But yeah, it's a little bit more expensive, but the property's value picks up way better than some of those smaller red states. Some of the smaller red states, they still pick up in value, but not as much as some of it also. That's because it depends like on the area as well too. So it's just a handful
Mhm.
of due diligence that you have to get yourself into, so that way you can know. And to
Okay.
help you out a little bit further as well too. Here's the map of it as well too. Landlord, here it is. Landlord friendly states 2024. No, images. Here is the map right over here. This is going to be your map to help you
Nice.
identify. Also, it looks like Florida is one of those red states. So
Wow.
Alabama, Illinois, Indiana, Arkansas, Louisiana. But this is a little bit outdated because there's been a lot of changes in laws as well too. Like Missouri is now one of those. Ohio, Kentucky, um, and there were some other ones, Midwest as well too. But these are going to be like your main states that you want to look for, because again, renter friendly, the government is going to take a long time. Landlord friendly is going to be they're going to be the state supports you on your side. So whatever it is that you want to do, if you want to skyrocket the rent, there is not a problem there whatsoever. But if you try to skyrocket the rent on a renter friendly state, then you can only do so by, I think it's like what, 10%, 15%, something like that. It just depends on state by state. So
Understood. Thank you.
that's your major area. But if you look at the red states, these are going to be lower price ones, except for Florida. Florida's getting very expensive as well too. And the thing with Florida is insurance. It's an insurance issue right now, especially with a lot of these storms. A lot of insurance companies are leaving. So now your price on insurance is going to be way more. So, and that's part of your expenses breakdown as well too, insurance. So you want to make sure that those numbers are really aligning up from one another. So, but this is the little bit older map, but this is the one that gives you the color code. You have to look through what the new states are for 2024, because again, real estate laws and real estate there's constantly changing changes going on. So you want to keep updated to like this. So I wouldn't suggest going through based on this map. I would say go through some research and just look at landlord versus a real estate friendly states and then analyze those. And then sometimes you're going to come across some of them that tell you what the average cap rate is, how much the rent is, or what kind of neighborhoods you should be looking into those, and then so on forth. So I would say start there so you can get some due diligence. After you while you're doing some research on finding like your market area or like your best state or whatever city you want to dive into, then now it's about understanding the numbers. Because when you're looking at a property in terms of rental, it's strictly down to the numbers.
Okay. Yeah. Thanks.
Of course, my pleasure. Um, so, but if you have any other questions, you can reach out to me on Meetup, or if you have anything that pops up in your mind by the next event on Sunday, then by all means, you can ask more questions on the next event if you're happen to be coming in as well too. Um, but if not, then I'll see you guys like on the next episode. And again, this recording will be available on YouTube as well too, if you happen to be missing out. But other than that, I'll see you guys and I'll see you on the next event. You have a blessed day.
Thanks.